Thanks for tuning into this broadcast. The June AMFI data is out and it's raised an eyebrow or two, some for the right reasons, some for perfectly explainable reasons. The net flow is down considerably on a month-on-month basis, even though that's not the right way to look at it, but there's a significant downtick. There's a first ever outflow, to my mind, from large cap funds as well that we've seen, and multi-cap funds. So that's the other point. SIP book, very healthy still, but has come out from the heady levels as well. So if you're an equity MF investor, what do you make of this? Would people follow the herd mentality is the other point that I think a lot of people would wanting to know. So Mr. NS Venkatesh, as he does every time, speaks to us at BloombergQuint after the AMFI data, talk and make sense about this data and try and give us his thoughts. Mr. Venkatesh, good having you. Thanks so much for joining in. Whichever we slice and dissect, Mr. Venkatesh, there are some perfectly explainable points and definitely some eyebrow-raising points.
I agree with you. In the sense that the data that we saw for June is showing a net inflow of around 7,000 and not crores. But compare that with the last year, June 19, it showed a negative of 1,59,000 crore. That's an outflow. Here, at least there's an inflow of 7,000 and not crores. So to that much extent, it is a little bit heartwarming. The main outflow is from the liquid funds of around 45,000 crore, which is expected because it's a quarter end. So that is expected. But the surprise is in the equity flows. The equity flows, the flows have come down substantially. It is hardly around 200 and odd crores, which is there. Net flows are there. So to that much extent, one of the reasons could be, I would say that money has gone out from the large cap and the multi cap funds. So I think essentially it is mainly because I would say a little bit of profit booking would have happened. So people would have taken their money out because the markets were rallying during the last week of June, and now the first week of July has been phenomenally good. But last week of June data is what we are discussing. So maybe they have taken out some money. They have seen the profit. They have taken out their money. Maybe the lump sum money has not come back into the mutual fund at this particular point of time. So I think they are waiting at the sidelines to see at what point they should react.
That certainly seems to be the case. And though the AUM is up because the markets have rallied, one doesn't know what happens. So what's the sense that the industry is getting when they're doing the conversations? Because we just did the mutual fund show before this, and the two advisors who were there said that their clients have seen some pullback because of salary cuts or job losses. But otherwise, those have stayed intact. So is it the direct investors, direct plan investors who've taken a step back? Because it's a sizable number considering that the overall equity inflow is just 241 crores.
No, but I would say that maybe the lump sum investors only would not have come back after taking their money. The SIP numbers are still robust, in the sense that around 8,000 and odd crores was what we clocked in May, yes. 8,123. Now it is around 7,926. So around 96 crores is a difference. That is mainly because we had given a facility of pause in the SIP because of the COVID reasons, and some of them would have taken the pause facility, so they would have paused their installments. That could be one of the reasons why the 96 crores thing is coming. It's a combination. I would say some because the SIP would have matured, some discontinuance would have happened, and some because of the pause that would have happened.
What about the balance fund category? Because that, I think, too, has consistently now shown flows which are not the healthiest. What's happening there? Is it the dividend related options, etc.? Is it something else?
I think so. It is essentially relating to dividend. So that is why most of the money is going out. Once that churn finishes, then maybe people will come back based on the normal investment strategy or balance funds investment strategy. And whosoever is willing to take a call on that balance strategy, they will come back to the balance funds. As of now, it is mainly that dividend churn. That is what is happening.
Mr. Venkatesh, what do the last 3 months of sorts tell you, if anything, about what the outlook ahead could be like? Is it possible to predict that? I mean, you've such good experience. The last 3 months are different than what we've seen in the last 3 years for sure. What does it tell you?
So it tells me that the mutual fund as an investment vehicle is intact. There is absolutely no issues. People still choose mutual fund as an investment vehicle for a wealth creation. for gold-oriented investments and all those things. But people who had put some money because of the tax advantage in the balance funds earlier, because of the new regime of the dividend tax getting tax at the hands of the people, I think they are slowly getting out of that particular fund, that scheme, balance funds.
Could the direct investing and direct trading also be a cause? We've seen accounts multiply big time. The trading volumes on the bourses have gone up as well. Could that also be a factor?
At this point, I would say not that big a factor. I would say that the direct is still, I would say, hardly around 18 to 19% of the overall AUM sort of thing. So I don't think if you take the retail, the institutional direct will always be there, but the normal individual retail, if you look at the direct, it is not that big thing to impact the overall mutual fund flows.
Okay, one final question, Mr. Venkatesh. I mean, just wondering if it's just too soon in the month of July. It's only 7 days, out of which a number of days were non-working.
Started off in a very slow manner, a very sedate pace. Not the full blown money has not come in. It's in a sedate pace.
Okay. Fair call. Mr. Venkatesh, appreciate you sharing these thoughts with us and look forward to talk to you, hopefully, in a better month of July compared to June.
Thank you.
Thanks, Mr. Venkatesh. Bye-bye.
Thank you. Bye.